Let's roll, Jamie. How are you, buddy? Thank you, team.
Thanks,
Hey,
Coach.
good morning, Dale. Can you hear me okay?
Yeah, I got you, Jamie. So why don't we start with the elephant in the room, and that's the firing of the head of BLS, and for a bad number. And it really was a good number. It just was a revised number. It's not like there was anything wrong with the number. What's your take on that? Something like this, which is kind of we're talking gemstones. This particular agency, or whatever you want to designate it, has been around since the late 1800s. So it's an
It's
important institution, right?
well, you would have thought so, but not everybody seems to treat it as such. I mean, beyond the obvious, implications and the signals it sends for political interference, etc. I mean, it's kind of, I mean, it was a shock. I don't think anybody wasn't shocked. But given what Trump has, what he said about Powell, for example, and the overt pressure that he seems to be putting on him and the Fed, I mean, I suppose it wasn't a total surprise. However, as you say, it's been around since the 1800s, and this is the first time, as far as I can see. Actually, that's not true. I read somewhere that I think Hoover in the 30s fired somebody from the BLS or put heavy pressure on someone to force someone out from the BLS. So it's not unprecedented, but it's certainly unprecedented in modern times. And
Well, I
you,
mean, if that's a metaphor and it's Hoover,
well,
that's not a great sign. It's not a great sign. I think there were cities called Hoovervilles back then, Jamie. So I don't think the
not the
president would
connection he
like.
would like.
Yeah, I don't think he'd like being compared to Herbert. Maybe Calvin Coolidge, but not Herbert Hoover.
But yeah, and I mean, that's just on the number themselves. I mean, I think haven't seen or read or haven't heard from anybody or read anyone who, I mean, on both sides of the aisle, it has to be said. I mean, I'm getting emails and research notes from, diehard Republicans, lifelong Republicans, and they're saying this is a step too far, in terms of economics and how
Yeah.
the separation between government and independent institutions. They're saying this is just, this has gone too far.
Don't you think it would
So
have
it's
been?
not a political thing.
Don't you think that this is something that Paul could have made a statement about, since they depend on it as well?
Well, I think he was asked at the press conference. Obviously, this was before Trump's intervention on Friday, but he was asked
Right.
on Wednesday. When did he give his press conference? It was
Yeah,
Wednesday,
that
wasn't
was
it?
it. Yeah.
Well, it seems like a long time ago. He was
I
asked
know.
about the quality of data coming through. I think it was more to do with the PC and CPI. There are question marks over the reliability of the input data into inflation. And he said, look, we basically we do the best. We deal with what we are given. It's not his place to comment on other institutions, but he said if the Fed deals with it as it comes in. I wouldn't have expected him to comment on other institutions, and certainly not on Trump's comments. He's made it quite clear he's standing aloof or apart from the all from the pressure that he and others are facing. And to be honest, I
Yeah.
thought his press conference, again, this was pre firing of the BLS official. I thought his press conference was quite impressive. Uh,
Yeah.
he batted away questions about Trump and everything that we've seen and heard, and that that clip of them both standing together with their hard hats. I mean,
Yeah.
that was quite amusing, if
that
nothing else.
I was
But
glad that they weren't going up on the roof of any big building. Those two guys.
well,
I'd
there
be
were
worried
cameras there.
about the.
There were lots of cameras there.
Yeah. So okay.
But
So
just on the
BLS.
numbers,
Go ahead.
themselves, I mean, obviously, it grabbed a lot of headlines, and I think you've probably seen the stat that Goldman and others have pointed out that out with recessions, excluding recessions, this was the biggest downward revision, May and June 2-month revision since 1968. So
Yeah.
it's quite a landmark. However, having said that, the data themselves, average earnings rose. The work week hours worked rose. The unemployment rate, 4.2%, is still historically low. I mean, that's basically, as Powell said, it's basically full employment. And interestingly, it's worth noting that payrolls numbers, payrolls growth, and household survey numbers, etc. They can all be revised, and they are revised as we're seeing. However, the unemployment rate is not revised. That's constant. And Powell said, as far as he's concerned, the unemployment rate is kind of the lodestar when it comes to indicators about the job market. That's the most important one and most accurate as far as he's concerned, and that's not revised, and that's down at 4.2%. If that starts to rise, then we've got a debate on our hands about what the Fed should do.
Okay, what do you think the Fed, when it sees signs and say this is followed up in the next couple months with negative job growth, that he'll not worry about letting inflation run hot?
Well, that's the point I think Waller and Bowman have made, and that's why they dissented. And it's worth noting that it was the first time since 1993 that two rate setters dissented. So again, that's another landmark. So we're in interesting times, as if we didn't know.
Yeah.
But I suppose the Fed's job is to maybe, as they would argue, to act preemptively. And Powell seems to be looking at the unemployment rate, amongst others, but giving special preference to that. And if you look at the unemployment rate, we're just not seeing any signs of big cracks in the labour market. Of course, it's worth noting that the unemployment rate is kept low because labour supply is falling. Immigration is down, and those kind of workers seem to be falling out of the workforce altogether. You can argue that's not a healthy sign long term for the labour market and
So
productivity.
the reason we have full employment is because the supply of labor has dropped.
Coming down, yes, yeah, and so the break even level of payrolls growth, maybe in the past it was 150,000, 200,000 a month required to keep the unemployment rate stable. That's much lower now. I mean, there's some estimates that it could go down to about 50,000, between 50 and 100,000 next year. So low payrolls headline figures in themselves aren't necessarily quote unquote bad and red flags for big problems in the jobs market. And low numbers like that can still be consistent with low unemployment rates.
And maybe the labor participation rate, besides immigrants leaving or being deported, or people have given up looking for
Again,
jobs.
those
So
those
that,
are
I
not
mean,
those are not
how,
good signs long term. But they can,
yeah,
but in the short term, they can help keep a cap on the unemployment rate, and I think that's what we're seeing now.
okay.
And yes, the labour force participation is down to what, 62%. I think it's coming down. It's the lowest in a couple of years.
Okay. So there are people, they've probably gone out and they're saying, see how long I could live on my unemployment. So we need to move to tariffs, and uh, things keep changing. It's
Day by
kind
day,
of
it
a,
seems.
yeah. So, but let's just say wherever we are today, we're there. Do you believe? What do you believe are going to be the economic impacts of tariffs, Jamie? And is it going to be enough to create a slowdown? Is it going to be a drag on growth? Do you look at the analogy between Smoot-Hartley when we went from 5 to 20, and now we're going from 3 to 17? It's kind of similar, eerily, to the same rate as we had in the 30s.
Absolutely. No, I mean, we can debate many things and argue the toss over many points with the tariffs, but one thing that you can't argue is the absolute level of the effective average tariff rate, which, if it's between 15 and 20%, that is undisputably the highest since the 1930s. That's obvious. What's the impact on that? You would think, or economics orthodoxy would tell you that that's a drag on growth. It's a tax. Ultimately, it's a tax tariffs are a tax. Who pays that tax is a question. Is it the importer?
Right.
Is it the retailer? Is it the exporter? Ultimately, I think what we might find is that it's probably
The
more or
consumer.
less it's the consumer.
Yeah.
And so that's
So
a tax on. I think I read some JP Morgan guys, analysts, what's I think their calculations were it's a 1% tax on the consumer or 1%, something like that. So it's a big, it's a hit. And
okay.
it's yeah, these guys, the economists at JP Morgan, I think they estimated that it's the biggest tax on the consumer since since 1968. So we seem to be going back to 1968 a lot.
Okay.
Um,
And what was that? Steel?
that's a drag on growth, and I think we saw it in the first half of the year. Um, the GDP growth, taking the two quarters in the first half of the year together, averaged about
Yeah.
1.2%, and that's about half of the sort of growth rate in the previous couple of years, and economists expect that to continue in the second half of the year. So
Okay.
we're down to about 1.2% growth. It's not particularly strong at all, is it? And
No.
the question is, does that continue, or is this a one-off hit to prices, or is it a sort of more permanent inflationary? Does it get built into consumer and business inflation expectations? That's what the Fed has to contend with, of course, and um,
Okay. All right.
I think it's a bit of a coin flip at this point.
Okay. It sounds like trading. Jamie, anyway, in the 30s, not GDP was 9%. Global trade was 9% of GDP in the 30s. Any idea what global trade is a percentage of GDP nowadays?
Global trade in terms of global GDP.
No, U.S. For
US,
the
yeah, I
U.S.
think
Yeah.
the US is a relatively closed economy, certainly relative to other big economies. I'd say about what 15%.
Okay, so it's still higher than the 30s. Do you
It's a
worry?
guess, by the way. Don't take that as gospel.
Okay, I
That's a
won't.
guess. But now that trade, the US is maybe it's a surprise to some, but it's a relatively closed economy.
Uh, yeah, you would think with what the environment is and tariffs that we were wide open and everyone was taking advantage of us.
And
That's a
that's
narrative here.
well, it's certainly a narrative coming from certain
Right.
quarters. Um, Again, this if you want this can take you down many rabbit holes,
R-
but the whole idea that the US has been ripped off by the world for 40 years because the US has run a consistent trade deficit since the last 40, 50 years. Of On the other hand, the US has benefited from that trade deficit, cheap goods from abroad,
Yeah.
exorbitant privilege for the dollar, the reserve currency, etc. All the capital inflows which have boosted Wall Street outperformance in US assets and kept Treasury yields down for, again, 40 years. What side of that argument are you on?
Well,
What are
look,
the benefits?
I lived it. So, we were really in the sweet spot for many years because of this policy that has become evil. And we were ripped off, and this was during my lifespan. I saw the benefits of cheaper goods and higher standard of living for a while, until the deterioration started, and mainly with everything costing more was what really changed it. People can't buy a house.
Yeah,
People have to spend 50, 60, 70,000 for a car. Their car payments are as big as mortgage payments used to be.
which is quite remarkable when you
Mhm.
lay it out in black and white terms like that. No, certainly inflation changes the dynamic, doesn't it?
Yeah, you know
Certainly,
what?
and
I have a concern. Tell me if I'm, just being a little bit too, paranoid. But, with these tariffs, a lot of the shipping routes and everything has to be changed. It's not going to be the same type of the trade routes and where they're going to ship to, and maybe they'll ship to different places for different tariff treatments. Are you
Mhm.
worried about supply chains during this transition? You know, people are worried about the prices of things, but they're not even thinking about you can't get things at any price.
Well, yeah, no. Certainly, when you talk about supply chains, we saw it after the pandemic and the Russia-Ukraine war and the burst of commodity price inflation. Well, 3 or 4 years back, shelves were empty in Walmart and stuff for certain goods. And if companies are having to reroute, as you say, their supply chains, countries on a national level are rethinking their trades relations with the US and other economic blocs and forging other ties, then yeah, most certainly supply chains will be affected to some extent. And we've seen in the
Mhm.
last few years that can lead to shortage of goods on the shelves.
Yeah,
And what we're seeing now is that the tariffs, there are definitely early signs of the tariffs having an effect on goods price inflation. Services inflation is coming down and it's quite benign, yet goods price inflation is starting to tick up. And I think, again, if you take out the pandemic, goods price inflation in the first 6 months of this year rose about 1.7%. Doesn't sound a lot, but that's the biggest 6 months rise since 1987, I think.
wow, that was a good year for in October. I remember
Well,
that.
you'll remember that, but you'll also remember that the market closed higher that year.
Yeah, reminds me of April. So, right? We had the crash. That was a pretty good crash. It wasn't like October '87.
No, but
Uh,
it was pretty severe, and here we are, all-time highs.
okay. Are you noticing anything at the ports? Because I've read some articles that port activity was down, and then I read something else that they're just as busy as they were last year.
No,
Any
I've seen
idea?
I don't keep a close eye on that, but I've seen the same as you. You've seen some conflicting stuff.
Okay.
What we haven't seen are these video footage, drone footage of ships, whether it be in Singapore, we've got 400 ships, in a
Oh,
bay or off the coast of LA, just waiting to get into dock. We haven't seen those videos like we saw again 3 or 4 years ago. So until
okay.
we do, I suppose we're not in outright panic mode. Is that right?
Yeah. What are your thoughts about this recent dollar rally? Just a bit of people being on the wrong foot, being bearish a dollar and short covering, and the trend eventually will continue for a lower dollar. Because there are some people talking about the potential for dollar shortages with emerging market debt.
Well, at the start of the year, we were led to believe that the tariffs would be dollar positive. Is that right? Am I
Yeah,
recalling that correctly?
yeah,
And
right.
of course, had the
They want a lower dollar and tariffs, which compete against each other.
exactly,
Like,
that was a
yeah,
two opposing forces, and lo and behold, the first 6 months of the year, it was the worst
yeah,
the first worst 6 months start to a year since the year of free floating exchange rates. So more than 50 years ago, was it
yeah,
11-12% fall in the dollar index.
yeah,
So clearly the dollar was oversold. All your technicals were pretty bearish, and sentiment was, uber
yeah.
bearish. So
The most in 20 years. So this was the biggest faults in Bretton Woods, and
yes,
and
yep,
this is the most bearish I've seen out to 30 years. This kind of positioning is
mm.
as bearish a dollar as
Are
in
you
30
looking at
years.
CFTC data there? Is that CFTC?
It's a combination of positioning and a big bank put this out that they found bearishness the highest in 30 years.
Right. So it's not a surprise then that at some point that's going to snap back and you're going to get a short covering rally, and some of that those overstretched, oversold positions get tidied up. However, do you take a fundamental view of the dollar? or do you take a short-term view, a sort of more technically driven view of the dollar? If you think the Fed's going to cut rates and two-year yields are coming down and short-term implied rates are coming down, yield spreads are going to compress, then the dollar's probably still a sell, isn't it?
Okay.
And that's what we're seeing. We saw on Friday, certainly, the US German two-year spread narrowed by 20 bips in a flash. And it's the narrowest in, what, 4 or 5 months now?
Hmm.
So maybe some of the pressure on the dollar short term is still to the downside.
Yeah, I mean,
Um,
I'm looking at it this way a little bit, Jamie, where we came down from 110. This was the announcement of tariffs. I remember it was in my face that morning. So we had a pretty good break, 1,400 points. So, markets can correct 50% and still be in a bear market. And
right.
I think they have to still shake out some dollar bears before we get another good break and lose our reserve currency status. All right. So,
Well,
uh,
well, I'm glad you mentioned that because if it depends how much store or value you put into the tick data and flow data like that. But the last tick data, and I know it comes with huge caveats, is lagged by 6 weeks, 2 months. But it was certainly a surprise to me. But foreign demand for US assets, for treasuries, including treasuries, not just equities, but agency debt, corporate bonds, equities, and treasuries, foreign demand in May was at or close to or at all-time highs. In fact, I think the private sector, if I've got this right, private sector inflows, net purchases of US assets, all assets, was a record $280 billion in May.
what?
So this
Oh,
narrative about de-dollarization, the dollar losing
this
its reserve currency
yeah,
status,
this is baloney.
does seem a bit overblown or certainly a bit premature if you go by these numbers. So it'll be interesting to see the TIX data for June and July and see if that's continued or if that was a one-off. But certainly foreign demand for US assets, and we're seeing it in, as we were talking about earlier, we're seeing it on Wall Street. I mean, money's still pouring into the US. And I
Okay.
said, and one of your guests or one of your colleagues was saying before I came on, talking about the 10-year yield, 4.2%. You know,
There
if you
is.
think if you think US debt, deficits, treasury supply, term premium going through the roof, worries about the fiscal outlook, trillions of dollars being added to the debt, yeah, and you've got a 10-year yield at 4.22%. That doesn't scream panic to me.
Okay. So it's really going to matter if this move follows through. And this is a huge triangle. And my bet is, no, I think the bonds have more left in them. I think they're going to take out this high here, see what they do around 90. But I'm thinking that the 10-year is going to bottom above this low
What
and
low is
then
that?
break. That's about 390. I have
390.
410. Yeah, I 410 for a target. It was Head and Shoulders, Jamie,
Mhm.
textbook stuff. Here's the head. Here's the left shoulder, right
Yeah.
shoulder. So it
Yeah.
measures 410. And then I think that might be about it. Let's wrap it with this. What's Powell going to do in September? Come on,
Million dollar question.
put on your
Well,
Powell mask. And tell
here's
me.
one. If given everything we've seen and heard and the developments of the last 4 or 5 days, if the Fed, let's not put it all on him because he's one of 12 voters at any FOMC meeting.
All right.
If the Fed was to cut rates in September, do you think the market would? How do you think the market would react to that in terms of what it says about
Yields
the
would go up like
the
yields would go up like last time.
why
Because there's going to be a fear of
inflation?
that we have QE and yeah, and we won't know in September what the full effects of the tariffs are by then. So it
I
will
think
mean don't. That's my opinion.
fair. I would suggest that if that would be seen to be caving into the pressure.
Trump. Right.
Yeah, and
So
that's not a good look either. So
all right.
that I think that would be hugely problematic and a
Okay.
difficult one to explain away.
Well, there are some good trades setting up because the market's trading like that's going to happen. So if it's not going to happen, it means people are leaning the wrong way, looking for this to happen, just like what happened here in the last couple weeks. They were
Oh, no, the
anticipating.
market is certainly going that way. No question about it. I
Yeah.
think we're what 80, 90% nailed on for
Yeah.
September, and another 25 by the end of the year is, more than baked into the cake.
Yeah.
But I think the optics of given what Powell said on Wednesday, the optics
Yeah.
of that. Now, of course, we've got another payrolls and maybe one more PC and one more CPI, so we do have data between now and then. But I think the optics would be pretty poor indeed, and I'm not sure not sure the market would take kindly to that. And it's also
That's what
worth
I mean.
pointing out, just before we wrap up, that financial conditions
Tighter.
are the loosest in about 3 years.
Okay. Even
If you
with
go
this
by the
dollar
Goldman
rally.
Sachs FCI,
Okay. So the
yeah, the
dollar
dollar.
rally hasn't really put any pressure on.
Well, the 2-year yields come down a lot, and Wall Street's at all-time highs. So you throw that all into the mix, and overall financial conditions, going by the Goldman index, is we're close to the loosest financial conditions in about 3 years.
Okay.
Can the Fed
And
be lowering rates in that environment?
yeah. So why don't we wrap it with this? Because you make great calls in the euro between interviews. We're at 115.40. Where are we going to be by the next time you and I talk?
In three
115.40. Where's the
months,
euro?
115, yeah, 115.40. So that's a,
109 or 110 or 120?
I was
Those
going
are
to
your
say, is it
choice.
110 or 120? Oh, God, you put me in a spot.
Welcome to my world.
Yeah, but that's your job is to make forecasts. My job is to write about
Well,
forecasts.
I want you to know what it's like to walk in another man's shoes.
Okay, I'll go for 110. I think the
10?
dollar. I think the Fed. I think if Powell stands his ground. Well, I say Powell. I mean, if the Fed stands his ground, and I actually wrote a piece after his press conference on Wednesday, and I thought it was a good piece at the time. By Friday, it was probably the worst piece I've ever written. But it was saying that we may have seen the last rate cut under a Powell-led Fed.
It could still be a good article. I think. Did you publish it?
Yeah,
Oh,
it's out
well,
there.
you know what? Like everything, the tincture of time, it'll season well in September.
Well,
Okay?
it's seasoned well for 24 hours.
Yeah,
But if Powell and the Fed hold their ground, hold the line, and they don't cut in September, uh, and inflation stays around 3%, and markets still hold above all-time highs, we could see those rate expectations start to melt away, and if that's the case, the dollar could maybe have a bit more life in it yet.
that's what I'm thinking. Great talking to you, Jamie. Man, we covered you know, the whole landscape. And uh, I I'm edified every time I talk to you. Thanks for coming here and doing this for our community. You need to follow Jamie on X at Reuters Jamie and
I
go to
don't post
Reuters.
anymore, Dale.
Don't what?
I don't post anymore on X.
Oh, all right. Oh, you got off it? Okay.
I'm not into
So
that.
all
Good
right.
luck.
All right. Well, I know how it could get on.
Reuters.com.
Yeah, it could get on your nerves.
Reuters.com is
All
where you
right.
can find all
All
the
right.
stuff.
All right. So let's face it, Jamie's on a mental cleanse. I don't blame you, buddy.
Extra
All right,
Malcolm's.
you get rid of all that toxic stuff that you get on X. I know it's ridiculous. Uh, I'd like to join you. Anyway, thank you, Jamie, so much for being here and sharing what your hard-earned knowledge with us and your hard
Pleasure,
work.
Dale. Always a pleasure, and look forward to the next time.
All right, Jamie McGeever, everyone. Follow him, Reuters.com. Read his articles and the people that he works with. Reuters is, one of those names that has credibility for many, many decades. And Jamie's doing a great job of carrying the torch for them. So I'll see everyone tomorrow. Remember, don't just count your news articles, count your blessings, and see everyone tomorrow. Good hunting. Thanks once again, Jamie. I'll see you in the fall, bro. We'll see
Remember, 110 on the
110.
euro. 110,
Yeah. Okay, I'm with you. I'm selling a rally. So that's a wrap, everyone. Cheers. You're welcome. People are thanking you, Jamie. And
Thank
that's a
you.
wrap. And you could join the team in 10 minutes on the morning edge. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.